welcome to another Gold Nugget segment brought to you by GoldSeek.com Radio. Today's special guest, James Turk of GoldMoney.com. My featured guest today, James Turk, founder of Gold Money and co-author of The Collapse of the Dollar and How to Profit from It. Hello, James.
Hi, Chris.
Let's start off the discussion today, if we could, with your latest article, Commencement of QE3, to send the dollar into oblivion. You know, on June 30th, the Fed wrapped up QE2, but you seem to think that another liquidity injection could be forthcoming.
Yeah, to me, it seems inevitable. You know, the U.S. government is spending more money than the market is willing to lend to it. That either means they have to go to the central bank, and central bank turns that borrowing into currency, which the government spends, or the government has to cut back. I see no indication whatsoever that the U.S. government is going to cut back on any of its spending aspirations. I mean, it can't even agree to cutting spending in the future, when in fact what it should be doing is cutting spending right here and now. So it seems to me QE3 is inevitable, and ultimately, you know, that's going to destroy the dollar through, you know, more inflation, if not hyperinflation.
Well, as we talked about earlier, lower purchasing power translates into stronger precious metals prices, and you note the underlying fundamentals, though, for gold and silver remain fully intact. You seem to think this correction has pushed a lot of the big players out of the market, and that might be setting the stage for, well, stronger prices.
Yeah, not only stronger prices, but, you know, I think this is a summer that could really surprise people. To me, it's like setting up like the summer of 1982 when gold soared during the Mexican debt default. Mexico is not the center of attention now, obviously. It's Europe, Greece, Spain, Italy, and, you know, any one of a dozen of other countries around the world that have too much debt and are over-leveraged. But people normally think the summer is going to be a quiet time, you know, go to the beach, and seasonally gold is often slow during the summer. I think this is going to be a summer, again, that, like 1982, really surprises people. So I'm very bullish here. And the fact that this correction that we've had over the last couple of months has driven records amount of people out of the market suggests to me that given how strong the metals have been during this correction, we're ready to come blasting out to the upside.
We also have seen the geopolitical conditions here deteriorating, particularly with the sovereign debt, as well as the Middle Eastern and North African concerns there, and the dollar you've already alluded to.
Yeah, you know, there's so many different factors out there that you know, causing people to exit national currencies and go into precious metals. You could point a finger at any one of them and say it's important. For example, the low interest rates. You can't earn any money on bank deposits anymore in all of the currencies of the world. So, you know, why not own gold? You know, counterparty risk. Why not own gold? The risk of rising commodity prices and inflation building into the system. So why not own gold or own silver? So there's so many factors. It's hard to really pinpoint which one is the biggest one. You know, I just look at it cumulatively and say, you know, there are a whole bunch of reasons to buy gold and silver, and that's why I continue to recommend accumulating it. You know, the prices are high, but the values of both gold and both silver are still very good. You know, not as undervalued as they were 10 years ago, but they're still undervalued by all of my historical measures.
Well, speaking of silver, you've been a strong proponent of keeping an eye on backwardation. And, of course, silver has been backward dated now for quite some time, and it remains that way no matter how far we look out on the contract. Why don't you tell folks just why it is that you think that this is a significant component in the silver bull market?
Yeah, you know, it's very rare for either gold or silver to go into backwardation, which means that the spot price is higher than the futures price. It's always the other way around. But since January, silver in December of 2015 has been at a lower price than spot silver, which is just truly remarkable. I don't think it's ever happened before. At least it hasn't in my study of monetary history. So what that's suggesting to me is that the available amount of physical silver out there is just very, very limited. And I think, you know, we're seeing anecdotal evidence suggesting the same thing. You know, mints are working at full production, except they can't get more metal to create even more coins for demand. You know, we're seeing tremendous physical buying, you know, in my company, Gold Money. And the fact that the silver price has done as well as it has over the past year, again, suggests to me that people recognize how undervalued silver is. But, you know, gold is undervalued too. I think they're both going higher, although silver probably will outperform gold going forward. In other words, the gold-silver ratio, which is in the 40s right now, will continue this long-term downtrend so that at some point in time in the future, 20 ounces of silver will be equal to 1 ounce of gold instead of where it is at the moment, which is 42 ounces of silver equals 1 ounce of gold.
Well, I know listeners will certainly like to hear that. A 20-to-1 ratio on gold to silver puts the price of silver in the neighborhood of $75 at least. So, a double from these levels. Also wanted to talk about the World Gold Council. They noted recently that the demand for gold in the first quarter of this year up 40% over last year. I understand that this is not a number that you put a lot of significance upon.
Yeah, no, that's right. The supply of gold is not what comes out of the ground every year. The supply of gold is what's come out of the ground throughout history, because that gold has not disappeared. It still exists. It's not like crude oil or soybeans or any other commodity which gets produced and disappears. The above-ground stock of gold grows and grows and grows. So gold mined by the Romans 2,000 years ago is identical to gold mined yesterday in Nevada. So, what I look at are those factors that compare the quantity of national currency versus the quantity of gold, which is its above-ground stock. And the annual increase in the above-ground stock of gold is inconsequential. The above-ground increase in national currencies is whatever central banks want it to be. And, given the fact that they're pursuing quantitative easing or printing money, however you want to call it, all around the world, it's clear that national currencies are being debased, which is explaining why the gold price is rising.
During the last bull market, primary bull market in gold and silver in the 1970s and 80s, for the most part, much of the population had limited access to gold and silver. Fast forward 20, even 30 years now, due to technological breakthroughs, relaxed geopolitical constraints, that is no longer the case. Suddenly, there are billions of people with a growing interest in gold and silver. Do you think that that is going to play a key role in the precious metals bull market moving forward?
Gold goes to where the wealth is being created. And right now, the wealth is being created in large quantities in Asia, China, India, and other places in that part of the world. There are people of primitive economies that want to have a better life for themselves and a better life for their children. They're prepared to, work hard to get ahead. And because gold plays such a key element in both traditional and cultural factors in Asia, it's inevitable that as Asia continues to grow and develop, the demand for gold will continue to be huge, coming from Asia. And the other thing, though, that's interesting, Chris, is we're seeing a change here in the Western world. People are no longer satisfied with paper gold. They want the real thing because they recognize the risks that come with counterparty risk. And they recognize it's better to own a tangible asset than a financial asset. So, the demand for physical metal worldwide is quite strong, and I expect that to continue.
Very well said. And as we wrap up, just wanted to make folks aware, those who haven't heard us mention this in the past, that your Gold Money Foundation has a series of very interesting interviews and documentaries, not least of which Fiat Money, Inflation in France. Can't recommend it enough. Very interesting take on Dixon White's treatise, if you will, there to hyperinflation. I think the discourse between you and locals, if you will, local experts, really make it a must-view documentary. James, any other information you'd like to share with the folks?
The only thing I'd like to say, is keep focusing on the big picture. This is a major bull market. Continue accumulating physical precious metal, physical gold or physical silver, whatever your preferences are, and focus on the longer term. When you're buying these metals, you're basically preserving your purchasing power and probably even having the opportunity to grow it as well, as problems with national currencies continue to worsen.
Very good. Well, thank you, sir.
Thank you, Chris.